In many ways, it feels like a bear market. The S&P 500 is down about 19% from its intraday record high set in January, and 18% from its closing high. A more than 20% move would officially mark a bear market, the first since March 2020 pandemic sell-off. For some, bear markets are tough to trade. Volatility is high, movements happen quickly, and depending upon what you're trading, the price action can oftentimes defy fundamentals. But I love to trade bear markets because when you get in on a move, you can press it for big profits. The number one most important thing to know about bear markets is that sell-offs always happen faster, last longer, and extend further than you would normally anticipate. And that is because of the human nature of investors. As soon as there are signs of trouble, they head for the exits, sell first, and ask questions later. With central banks ready to raise interest rates aggressively, you need to arm yourself with the right trading strategies. In this video, I will share with you 3 powerful strategies for profiting in bear markets. These strategies are designed for Forex traders, but can work in many different markets. For day traders, it's fairly easy. A simple way to trade is to fade the SMAs. SMAs refer to the simple moving average. You know that stocks are selling off and we are in risk off mode. So pop on the 20 and 50 period simple moving averages onto your 5-minute chart. You want the 50 to be above the 20 because you're looking to sell. So that means that the longer term average is above the shorter term average. Wait for that pattern to happen, and it does, and as you can see here, it does in this Euro-Yen chart. Then, step 2 would be to sell when it rebounds back to the 20 SMA, and you place your stop at the 50 SMA. There are many ways to manage the trade down. First, you can trail by the 50 SMA. Then, as the price moves away from the 20 SMA, start trailing by the 20 SMA to maximize profits. Here's a chart of the trade in dollar-yen. Step 1, you wait for the 20 SMA to drop below the 50 SMA. And then step 2, you sell when it touches the 20 SMA. Stay in the trade until close above the 20 SMA for a profit of nearly 90 pips. There's one more example on the chart that I want to show you where we sold at 127.39. And while it wasn't a big move, it was still a positive one because when the currency pair moved back above the 20 SMA, the close was 127.29. If you like to trade 1-hour charts, my zip strategy on 1-hour charts works beautifully. We had a beautiful trade selling dollar Swiss on a retrace to the zip indicator line this past week. Also, a clean euro-dollar buy signal on Thursday. Here's a nice short trade also in euro-pound. The beauty of zip is that we are not only trading the pure risk-on, risk-off story, but in many cases, yen crosses can be unusually volatile. So the crosses that exclude the yen are a great place to hide because they are more responsive to economic data and can be less volatile in high volatility environments. Also, zip is my most powerful strategy. I've been trading it for years. Last but certainly not least, for our traders with longer term time frames, let's bring in our double Bollinger Bands. The first and second standard deviation Bollinger Band is what I look at for my Bollinger Band strategy. Now, this is a strategy that I've taught many times over. I write about it in practically all of my trading books. But if you really want to learn about it and want me to do a video on it, please comment on this video, and if there's enough interest, maybe I'll do it. So, taking a look at this chart, the 2 lines on the bottom are the lower Bollinger Band sets, with the one on the outside being the second standard deviation, the one on the inside being the first standard deviation. That's the sell zone. The 2 upper lines are the buy zone, with the outside line being the second standard deviation and the inside line being the first standard deviation. So when we get to a downtrend, as you can see in this chart, the currency pair will remain in the downtrend zone for an extended period of time. And when it's in the uptrend, a strong one, it will remain in the uptrend zone for an extended period of time. So this gives you a technique for riding it down. Because when we are in the, as you can see in this Swiss yen chart, when we're in the lower Bollinger Bands, you can see that, you basically sell on the retrace to the moving average. Retrace to the first standard deviation Bollinger Band. At some point, the trade will stop working as near-term bottoms are set, but hopefully you've caught enough of the downside enough times to offset those losses. Now, I hope you enjoyed these strategies and you learned about different ways to profit from the bear market, because the bear market could be here to stay a bit longer than we'd like. And if you want to learn how to trade in general, please check out bkforex.com.